Hello number curious friends, welcome back to the channel where we talk numbers. Today we'll take the adjusted trial balance of our Apple shop and turn it into financial statements, income statement, balance sheet and touch on the cash flow statement. This is the moment where bookkeeping becomes reporting. Remember the accounting cycle? Journal entries, which become a ledger OT accounts, which in their turn become a trial balance or an adjusted trial balance, with a final destination, financial statements. We are at the last jump. Let's get back to our, though very small, adjusted trial balance of our Apple shop. All amounts are in US dollar. Debits on the left, credits on the right. Totals balance at $11,550. Before we move on, let's make two adjustments and include interest expense of $5 and taxes on our profits of $10. Taxes are everywhere, no way to avoid them. Let's assume we paid them in cash and reduce our cash balance correspondingly. If you want, you can do that via T accounts as well. Now our trial balance will look like this. We decrease our cash by $15 to $935 and add new expenses. The totals are still the same, $11,550, as our transactions impacted two debits, expenses and cash, increasing one and decreasing the other one. Okay, we have our trial balance. What do we do now? First, we need to pull out income statement elements, revenue and all expenses, from our trial balance, and then assets, liabilities and equity which belong to the balance sheet. In the last lesson we discussed the trial balances are not structured. It's just the list of all ending debits and credits, all in one row. How do you identify income statement elements versus balance sheet? Typically, by name of an account. Also, in most cases, trial balances will have certain account numbers assigned to every account. These account numbers will have internal logic which will help to allocate amounts. Numbering of accounts depends on the accounting software we are using, and in a lot of cases there are also national accounting standards which regulate this. For example, accounts starting with 1 can be for non-current assets, accounts starting with 5 can be for current liabilities, accounts starting with 7 can be for expenses, etc. In addition, in the trial balances, usually balance sheet items are in the upper part and all P&L items sit below. Here you can see an example of the trial balance in accordance with the US GAAP. GAAP stands for Generally Accepted Accounting Principles. In this trial balance we have account numbers, account names, mapping to balance sheet and income statement lines. As you see, balance sheet accounts are on the top, income statement in the bottom. The logic is completely the same as we discussed. Assets are debits, liabilities are credits, revenues credits, expenses are debits. Let's have a look at our Apple shop trial balance. The way it's constructed, we also have income statement items in the bottom half. We can clearly see them by name. Here they are. Let's pull them together into simplified income statement. Revenue $300, cost of goods sold $150. They result in gross profit of $150. Then operating expenses, salary $30, rent $50, depreciation $20. Together they result in an operating profit $50. Then interest $5. Now we have profit before tax of $45. And then income tax $10. And finally net profit $35. Our net profit is $35 and this number will flow into equity on the balance sheet, into so-called retained earnings, the earnings we retain. Now let's move to the balance sheet. Equity at the end of the period increases by that $35 of net profit. Let's assume our opening equity was $700 and retained earnings were $300. If we didn't pay dividends, closing retained earnings become $335 and equity becomes $1,035. Now let's take the asset, liability and equity accounts from the trial balance. We also present equipment net of accumulated depreciation. So assets, equipment $10,000, less accumulated depreciation of $2,950. That gives us total non-current assets of $7,050. Cash $935. Accounts receivable $200. Inventory $150. Total current assets $1,285. Together we have total assets of 8,335. Now liabilities. Share capital 700. Retained earnings 335, composed of 300 before and 35 of profits for the current period. Total equity 1,035. Bank loan 7,000. Non-current liabilities 7,000. Accounts payable 300. Current liabilities 300. All of these adds up to total equity and liabilities of 8,335, which equals total assets, balanced. What about cash flow? To build the cash flow statement properly, you need two balance sheets, opening and closing, plus the income statement. Let's quickly discuss it, and details you can find in a separate lesson, link in the top right corner. The indirect method starts with net profit of 35, adds back non-cash expenses like depreciation of 20, then adjusts for working capital changes, movement in receivables, inventory, payables, and finally shows investing and financing cash flow. We won't compute all of that today, but this is how the bridge works. Okay, now what are the common beginner mistakes? First one, forgetting to close net profit to equity. Another one, mixing balance sheet accounts into the income statement accounts and vice versa. Or showing equipment at gross value without subtracting accumulated depreciation. Remember, totals not tie in, assets do not equal liabilities plus equity, go back to the trial balance and do some detective work. And again, modern accounting software does most of the work for you, but you still need to understand the logic behind financial statements, as the software does most of the work, but not all of it. Let's summarize the lesson. Adjusted trial balance is the launchpad for every financial statement. Start with the income statement, then roll the profits into equity. After that equity roll forward with profits, the balance sheet must balance. Cash flow needs profit plus two balance sheets to reconcile to the cash line. And that's how you turn a trial balance into financial statements. If you found this helpful, tap like, subscribe and ring the bell so you don't miss the next lesson. See you soon and keep those debits equal to your credits. Thanks for watching.